After the change in debt taxation rules, investors have looked at other opportunities. With that, we have seen a rise in inflows of arbitrage funds. But what are arbitrage funds? Are they better than liquid funds? To know more about whether it is the right time for you to invest in arbitrage funds, join us this Saturday. But wait, hold on. What is the number one risk that NRIs face when saving money? Their ESOPs are fully linked to the performance of their employer. In a bad cycle, you may face job loss, take a cut in salary, and also see stagnancy in income. Your 401k is a wonderful vehicle that can help you towards your retirement. But what if there's a need for liquidity earlier? To know where you can diversify your ESOPs and your savings, join us this Saturday where we explore the opportunity in India.
Elections and markets. Every time you have a general election in our country, the market starts anticipating the outcome of the election. So people start looking at all the exit polls, how campaigns are going, what the media is saying, what the grey point says, what the odds are in Sata Bazaar. People track so many parameters. Add to this the layer of our own political biases. Each one of us has a bias, right? So all this gets layered into our judgments and we start predicting in our own way as to what the outcome of the election would be. A lot of predictions can be wishful. When do you know it's wishful? When the results are out. Until then, what do? We invest in a certain direction, in a certain way in the markets based on what our prediction or expectation is. So if you think that the incumbent government is going to come back and you like the idea, you are more bullish. If you think the government will not come back and therefore you think that a regime change is good for the country and you want to profit from it, then you would have short positions, right? So each one of us may well have a tendency to take our biases into our investing and trading. But how many times have we succeeded in this? A friend and I would discuss as to how many times we have succeeded, because we have been tracking elections from 1991 and many times we have been spot on, sometimes we have been wrong. The irony is, even when we are spot on in our prediction on the election, the market may have punished us. So it could be operation success, patient dead with respect to your investing and trading. So that has also happened most of the time. So predicting elections essentially is a mug's game for an investor. Very rarely are we going to profit big from it. When I look back, for all the stress that you take trying to emotionally get invested into an election, the results are no big deal. If I take the most recent success of an election, for me in predicting, it was 2014. But my investments were made between 2011 and 2013. There's hardly anything I did in the run up to the election, and those investments which I made in 2012 and 13 mature into great successful bets 4 years later in 17 or 18. So all the excitement about the election was purely emotional and not really productive. There's nothing that I can attribute as an effect if the election were the cause. The election was just an event. It was like an item number in a film. You just get entertained. So effectively, that was one election where the outcome was right. And the portfolio would have anyway done well because it did well over a much longer period and the election didn't make too much of a difference to me. Now let me go to another election where I thought I had called it right. That was a very difficult election to call, 2004. I called it right. But my portfolio got punished because I was fully invested and the markets punished the result of that election. But we just labored on and bought whatever became cheap after the election, and over a period of time, after 4-5 years, we were rewarded for that. Again, the reward came after 4-5 years. So what's all this circus that we are playing with respect to an election result. It's purely emotional, it's purely our excitement, our need for action, our need to take a stand, our egos telling us that we were right or wrong, our egos driving us into arguments on the outcome with our peers, our egos wanting to grandstand on social media about what we think will happen. So it's one hell of an ego trip as far as investors are concerned. Is it productive? From my experience, not really. So I think that I would rather be a spectator watching and enjoying the fun when you're watching a circus. I would liken this to that. Or when you're watching, let's say, a T20 cricket tournament like the IPL. To me, the election is no different. Whatever be the outcome, I don't think that it's going to matter in the long run to my investing. And my experience tells me that. So I would advise you to think through this and not get emotionally too strung up about this election. Elections come and go, economy continues to grow, businesses will grow better when the economy grows faster. Businesses which are more efficient tend to give superior performance during phases of higher economic growth. If the markets for some reason becomes overreactive during an election result, we need to use that opportunity to buy those businesses which are more efficient during those times at valuations which are depressed and hold them long enough, probably into the next election or into the run up to the next election, because that's the kind of gestation that gives us the best returns. So let's not worry too much about elections. Let's focus on what we need to do, which is buy businesses at the right valuations using the volatility as an opportunity. Thank you for watching this video.